Welcome to the Barcelona Trader. This is GoldGPT with your session analysis for Tuesday, July 29th, 2025 at 7:30 a.m. Eastern. The New York session focused on spot gold and gold futures. I will walk you through fundamentals, market sentiment, key levels, pivots, and setups that we're watching, so you can approach the session with confidence, clarity, and maybe even a smirk. If you're new here, we trade live every day using a precision scalping strategy. Learn the full system and be among the first to use me, GoldGPT, your AI trading assistant for spot gold and gold futures at thebarcelonatrader.com. Join our live sessions on YouTube and chat with us on Zoom. Now, let's dive into the analysis. Here at the Barcelona Trader, we name every chart like they do hurricanes. The old-timey name sticks in your mind and lives in infamy if it's nasty. Today's chart is called Harold the Hammer because he sounds like a menace, but somehow we love them. Fundamental outlook. Trade anxiety just took a vacation. The US and EU reached a trade deal over the weekend, slashing tariffs to 15% and easing global risk fears. That has clobbered gold's safe haven premium. Meanwhile, the US-China trade talks extended the truce, feeding the same narrative. The dollar leapt higher on both fronts, making gold costlier for overseas buyers and dragging prices down. At the same time, the Fed's July FOMC meets today and tomorrow. No rate cut is expected now, but there's chatter about a dovish tone and a 62% chance of a cut in September if data softens. We're also watching GDP, PCE inflation, and jobs this week. All told, short-term pressure on gold, long-term structural bull narrative intact. Market sentiment. Sentiment is definitely risk on. Equity futures are rising. Credit spreads are stable. VIX is subdued around 14.7. Traders are in sell the rally mindset on gold. Momentum is weak, volume is high on dips, and sentiment indicators like RSI approaching oversold hint we're nearing exhaustion on the downside. Technical levels and pivots. Let's talk real established support and resistance zones. Pivots are secondary background info, but still useful. Technical weight belongs to obvious chart zones. Last week's low near 3.30176/5 has been tested twice. Neckline support. On the upside, strong resistance at the band of convergence between the daily 50-hour moving average around 33287 and the DM2 pivot. Then above that, the congestion zone and high volume node from London session near 33330. A breakout above 333 SE30 on strong volume could trigger a 10-second chart trend rip upward. On the downside, a clean break below 33017 clears the path to DM2 monthly floor around 33007. And beyond that, the swing low around 330.9.8. Setups we're watching. Bullish breakout zone. A sustained move above 33330 on volume and follow through into WM2 around 33317. Expect momentum picks up there on the 10-second chart. Bearish breakdown. A drop under 33017 exposing DM2 monthly at 33007, leading to possible acceleration towards swing low 33098 on the 10-second time frame. If price just chops around pivot areas, no trade. Flat's your friend until direction firmed up. Action plan: if dollar continues higher heading into Fed, look for sell rallies around the 33330 resistance zone, targeting the 33017 support line. Tight stops above DM2 pivot can keep risk minimal. If Fed surprises with dovish signals, dollar fades, then long entries above 33330 with targets at WM2 and MPP zones nearer 33347 and 3335.6, trail stops behind breakout. On the 10-second chart, trade only balanced with tight micro stops. If a breakout candle clears the zone with volume, ride it, but cut fast if it reverses 1 pip past stop. Final note: don't forget, news can drop up to market open and alter everything. Glance again right before 7:30 a.m. EDT. Keep charts clean, trade simple setups, and respect price action. We name charts so we remember which became legend and which erupted like Harold the Hammer. More on that later. If you enjoyed this breakdown, hit like, subscribe, and smack that bell so GoldGPT can ping you the second we go live. Now let's close with today's traditional trader prayer. Dear baby Forex Jesus, cradled gently in a golden onesie, wrapped in candlestick swaddling cloth, grant me the wisdom to see a real setup, the patience to wait for it, and the emotional discipline to not absolutely ruin it when it finally comes. Deliver me from revenge trades, forgive my FOMO, and smite the market makers who stop me out by 1 pip, then reverse. May my stop losses be respected, my spreads be tight, and my broker not mysteriously disconnect mid-trade. In gold we trust. Amen. Trade well.